Well, what's going on, YouTube? How's it going today? My name's Jim. I'm a crypto trader and a Forex trader here to help you understand the market from an Elliott Wave perspective. Don't forget, none of this is financial advice, but you're going to get my view on the market. We're going to look at Bitcoin and Litecoin, and this is the Jim of All Trades channel. Glad you made it by. All right, we're going to jump into the market quickly on this 4th of July weekend. Hope you guys are enjoying the liberties that you've been given and the freedoms that you have, and fighting to keep them. We live in some tumultuous times, don't we? Well, let's jump in and see what's going on. Okay, well, I'm looking, guys, I'm looking here at this is a fourth wave of some kind. Okay, basically, um, there's a couple of ways to look at this whole wave as a fourth wave, not just here, but basically what we have here is a move here. We got a three-wave move there, and now we're expecting a three-wave move down like that. The only problem I have is that leaves this little guy out here as a lone ranger all by itself, which from an Elliott wave perspective isn't very good. So this would be a 5, a 3. Now one might say that that's the 5 and that we're heading up from there, but the problem is with considering that is that this is a three-wave move. Okay, and that means we need to go down. Okay, so anyway, I'm looking at this as some kind of a larger correction like that, or that this is the top of something here, at the top of the third wave. We have difficult wave structure to deal with here, no doubt about it, no doubt about that. But just looking at this, well, come on, just looking at this section of the chart here, let's just analyze that and see what the imminent move might be. When we don't understand the full macro count, guys, what we try to do is we look and see what the imminent move might be, so we can be ready for that. Okay, we look at what are the signals and things that we can see in the charts showing us. Okay, so that's the way I've been trading up to this point. I am short, and I have been short since $9,600, about $9,650, I think was my entry. Right here, here, and here is what I'm expecting. Now, depending on how you interpret this wave right there, it depends on what you expect to get here. Okay, and Elliott, basically, if you start out with a 3, okay, and you get a 3-wave up that doesn't come to 90% of that third wave, then you expect a 3 down. Okay, and so that would be a 3, 3, 3. Okay, now also if you get a 3-wave, but then the B wave comes up 90% of the A wave's distance, then that's what we call a flat, and we'd be looking for a 5-wave down. Okay, so if you start with a 5, you're going to always end with a 5. Okay, so I'm counting that as a 5-wave move. You can see how I've labeled it as a diagonal. Okay, I'm open to the idea it's a 3-wave move, but looks like a 5-wave move. With that being said, that's a 5, that's a 3, and now we're expecting 5 waves down. So with that expectation, what we now want to do, and once we understand that macro look, we want to look and see what formation is being made here so we can see 5 waves. And where would those 5 waves expect to come? Well, what you would expect is that it would at least come to, you begin to thinking about the 5 waves down to the 1-to-1 extension. That we would get a 1-to-1 extension between this wave and this wave. And some of you may not even know what that means. Let me just take a minute to explain that. So we're going to go over here to the third row down here from the on TradingView here, and we're going to open the trend-based fib extension. You see I put a little star next to that. That creates a favorites down here for me. So my favorites bar is right here, and I just kind of keep it down here out of the way. So right here you can toggle right here, this blue star, you can toggle the favorites on and off there. And so I just toggle it on there, and my favorites, and I use the trend-based fib extension tool. Okay, what we do is we measure the distance between the first wave from top to bottom. Okay, so in other words, if I were to take a line, for instance, and I were to just measure how long that wave is, okay, then I could just take what I just measured and say, okay, how does this next wave compare? I would expect the next wave to come down to the same depth, a 1-to-1 ratio, 100% ratio between as we compare the length of this wave to the length of this wave. Okay, and so I could even double that right there, and you can kind of see. Let me make it white so it's easier to to see there. There we go. Now let's make it nice and thick as well. There, how's that? Is that better for eyeballing things? So when we talk about a one-to-one extension, we're saying that the extension of this third wave move, this whatever this third wave is, whether it's a C wave, it should at least come to the one-to-one, a one-to-one ratio. Okay. Now you don't have to sit there and draw lines in order to get that one-to-one. We have a tool. It's called the trend-based fib extension tool. You click on that guy, and what you do is you simply click at the beginning of the first wave you're measuring and the end of that first wave. And what you've done with 2 clicks is measure the length of that wave. And then you're going to extend it from the end of the second wave, which is right here. We got a 3-wave move right there, and so we're going to extend it from there. So that's how we use the trend-based fib extension tool. Okay. And so now, basically, if it comes down to this region right here, that's a one-to-one extension. The number 1 right there. It's the one-to-one extension. You'll always know my one-to-one extension is white on my chart, my 127 is red, and my 1618 is yellow. And I have those colors on my chart so I can readily see them very quickly. And so basically, we would expect a 3-wave move that comes down to our first target would be about $8,300, $8,285. Which then I always look left and I say, okay, where does that fall? It falls right down here at the bottom of that structure. So those of you who trade support and resistance, I'm doing the same thing with my fibs. I'm just doing it a little bit differently from a wave structure standpoint. But right here would be our first support and resistance zone, okay, or at least one of them. You'll notice that the 786 support and resistance here is right here. So here's the 786 as well. So we always keep the 786 on our chart as well. And then when we go beyond that, the next support and resistance zone, if you just look right over here, is right here, boom, which correlates to the 127 extension, which is beautiful. Okay, and then just so you understand how the market moves Fibonacci, I just coined a phrase. Right here at the top of these waves, right here, is we have the next support zone, which correlates with the 1618. And so as I draw lines at all these structure zones in the market, you'll notice that the fibs, the Fibonacci's, just do that beautifully for you. Okay, especially using the trend-based fib extension tool. So with that being said, that's why I use it, right? So we got the wave here. Now we're looking our first target. So our target zone basically is going to be right here to see what happens. Okay, the nature of the wave. Now, if this wave comes down and hits the 1-to-1 extension in 5 waves, then I would and then we have 5 finished waves, then I would expect a rebound to the upside, and we have a nice long entry down here, which is what I'm eyeballing as a trader. If it can also come down to the 127 extension, which is also very common, a very common level for a corrective wave, okay, to come down to, and that again, as long as I see the 5 waves I'm looking for, okay, then that might be a nice entry for a long position to the upside, okay. Now, if those 5 waves aren't complete and it looks like we're coming down here to the 1618, guys, I'm going to start reconsidering the nature of this wave as not corrective, okay, where we would expect a bounce to the upside after, but rather this would be, I'd be thinking more impulsively that this is actually the beginning of an impulse, change in trend, direction of the market. And so when we get to the 1618, that's really the cutoff zone for an impulse move. And so basically, if it gets down to this range here and goes past it, closes beyond it, we get a little bit of a pullback and a 5th wave. That's an impulse to the downside. We would expect a 3-way pullback and then continuation to the downside. So those are the implications of what we're looking at on the chart, guys. Okay? All right, so with all of that being said, let's look at what's being made and see what we can see. All right. Again, I am short. My bias right now is short. I'm looking at this wave right here as a 5-wave move. I'm looking for 5 waves down. With the way this structure is being made, it's really hard to see how that 5 waves is going to be made without an impulse. In other words, it looks more impulsive than it does corrective to me. I could be wrong. In fact, if we change our interpretation of this wave, to say, hey, listen, this could actually, instead of a 5-wave, we could simply have some kind of a complex WXY on our hands, or an ABC on our hands. A, B, C. And if that's the case, if that's just a three-wave move, and then we got a three-wave move, then what we would expect here is another three-wave move, and we have 5 waves there. We got three waves there, expecting 5 waves down, and that would be a beautiful W, X, Y double zigzag. Okay, so it really depends on how you interpret that, guys, a 5 or a 3, and what we're expecting the shape of this last wave to look like. And that's important, again, because the shape of the wave is, again, structure. The structure of the wave being made really tells the tale for me on what to expect price to be doing, what I would expect price to be doing. Okay, so this is kind of a big question mark here, right? So we'll have to wait and see what we get. But again, down is the direction for me, and I'm watching the $8,200 range first, $8,250 to $8,300 in that ballpark. My secondary target, pardon me, I've had a lazy day today. Let's see, but the secondary target would be about $7,800 for the 127 extension for a 3-wave move. If we get down here to 7,200 to 7,300, guys, I'm thinking more impulsively. That means I'm thinking this is more of an impulse down to the downside, not a corrective move. But we're actually looking very strong to the downside. We'd be looking for lower targets as the market moves up and down, but we'd be trending to the downside. So that's the way I'm looking at the market, guys. With all of that being said, let's see if let's do some final micro analysis here. So that's the basic analysis of the market right now. It's where we've been sitting for a while. Nothing's changed a whole lot. That's why I'm not bringing a ton of videos every day, because nothing's really changing very quickly in this slow corrective move. But I think we're poised for a larger move pretty soon. But let's finally in this video just kind of look at the micro count here and see if there's any clues here for us that say, okay, what could be happening here? Where could price be going in the imminent future? What should I expect so I don't worry about where price is going to go, so I can be calm? And that's the beauty of Elliott Wave. You actually know where price is going in general, and when things happen, you're like, yeah, I was expecting that. So let's look at this now and see what's going on. Okay. All right, we're going to look at the 30-minute chart here. And what we have here is looks like a 3-wave move to the upside very clearly. When I put the fibs on it, boom, boom, boom. You can see this one came up to the 786, the 786 extension, which, you know, it's basically a 3-wave, a 3-wave, and a 3-wave. Usually we like the 1-to-1 extension. I was expecting $9,400. We didn't get the target. It stayed short of that. I was very surprised by that, to be honest with you. Let's see. So anyway, we came to the so this could be finished, guys. In other words, come on. That's a 3-wave move right there that could be done, and now we have impulse to the downside. 5 waves right there. 3-wave pullback could be heading down from here. Okay. The other likelihood is that this is actually a larger correction. That's a 5-wave down. We're going to get a little bit of a larger pullback back to the $9,200, $9,300 mark, and then we go down to finish out. That's a possibility. Okay, so that's something I'm aware of as a possibility in this wave structure. The other possibility is that this B wave is not finished, that we actually have targets way up here. Let me show you what that would look like. We would expect then, if this entire thing is a 3-wave, then we have a 3-wave here, okay? Then we would expect another 3-wave to the upside, looking for a $9,400 target to $9,565 $100 target. Once that is finished, 3-wave move, okay, then we would expect our 5-wave impulse down to the downside to finish out this correction. So those are the ways I'm seeing this wave, guys. That this could go down and go down from here. It'll be more impulsive. If it goes up from here, okay, gets it up here to the $9,500 region, but doesn't break this high, and then reverses, we would be expecting those lower targets we've been calling for quite a while. Okay, 8,200 to 7,800. Okay, So that's the way we're looking. So watch this move here. We might get it. We might get that move to the upside before we go down, or we simply could go down from here. But down is my directional bias right now. This three-wave move pretty much sealed that deal there. That three-wave move said, hey, we are going down because that's a three-wave to the upside. So we're expecting more downside. All right, you guys have a great day. Hope that tutorial was helpful to you. Just that analysis, just looking at the waves and understanding what's going on. Chart's becoming a lot more clear, but down is the direction I'm more confident in my short than ever. So you guys have a great day and have a great weekend on this Independence Day. We'll talk to you later. Bye-bye.